Hi guys, I'm Dan, this is Kai. We are the directors at Crescent Mortgages. Today we're bringing you a mortgage market update in the middle of 2023. Things are in chaos, haven't they? Market is crazy, I'm sure you've seen on the news. So we just want to give you an update from the ground as a mortgage broker, so not necessarily the headlines, but as a mortgage broker, how things have changed, how things are looking at the moment, and how that might impact you. So let's jump into it. As always, to start by letting you guys know that we're not YouTubers, we are mortgage brokers. So we are here to assist you if you have to organise your own mortgage. So if you're looking to buy a property or you're remortgaging, and unfortunately obviously coming on to potentially a higher rate, we're able to assist you throughout the entire process, completely free of charge. There is no catch. So if you need any assistance, just get in contact with us. You can give us a call, send us an email, head over to the website, or leave a question in the comments and we will do our best to come back to you. So I guess initially, the reason we're kind of teeing up this video is because the market's chaos at the moment, isn't it? You know, it's not just a normal calm market. Things have changed quite significantly in the last 6 weeks. So we just want to give you guys an update. And when I say the last 6 weeks, we're filming in July 2023. Now, just a quick history, kind of recent history lesson. So around 18 months ago, the Bank of England base rate was an all-time low of 0.1%. Since then, throughout 2022, it was slowly increasing, kind of monthly or every couple of months, until the mini budget in September of 2022. Bit of a cock up. Obviously, the Prime Minister lost her job a couple of weeks later. So following the mini budget, fixed rates jumped up quite significantly. It was the highest fixed rates we've seen in a long time, wasn't it? And a lot of them were around the 6% mark, give or take. Since then, things calmed down, and throughout kind of the start and the first half of 2023, fixed rates have been slowly coming back down. So still not as low as they were a couple of years ago, but from 6% or so, they've been slowly creeping down. They got down to around 4%. So a nice drop, a couple of percent below where they were kind of in the end of 2022.
And that's the fixed rates that the lenders are offering, not the base rate.
Good point. So actually the base rate is still creeping up, but where maybe fixed rates, they overcompensated last year and probably took them higher than they needed to. The fixed rates are in a strange position where the base rate was still going up and is still going up, but fixed rates were coming down throughout the first half of 2023.
They're getting closer together.
Yeah, exactly. Now, we found ourselves in a situation through a few different reasons, which we can touch on at the end, where in the last kind of 6 weeks from June 2023, all of a sudden fixed rates have started to jump back up, and we've seen them jump from around 4%, again give or take, to on average above 6%, haven't we, as we speak today.
Yeah.
So that's kind of the last 18 months, and that's where we are today. Now, in terms of just a couple of the points that we want to highlight, I don't know where you want to start.
Well, I suppose maybe the media and what you maybe see that it is not strictly true and not as relevant in some patches. So the average rates is often commented within BBC News, Sky News, in various places. You'll see the average rate, and the average rate, I think the last one we saw was approaching 7%.
A couple of days ago,
mid-July,
BBC News, they said the average 2-year fix was nearing 7%.
Yeah.
Was the wording that they used, which that probably is true. That maybe is the average, but bear in mind that's across a lot of lenders, isn't it?
A lot of lenders, a lot of products, a lot of scenarios. So that doesn't mean that if you're remortgaging with a good amount of equity in your home, or you're buying with a good deposit, you're going to get a 7% mortgage, or in that bracket. Some of the research we looked at today, a 2-year fixed rate at the moment is in the region of what, 6%?
The absolute best are around 6%.
Yeah. That will probably change by the time you watch this.
And the average 5-year, about 5.6%. So actually the 5 years are slightly lower than the 2 years, aren't they?
Yeah, and there are reasons for that again, we won't get into in large detail here, but But you can see, whilst the average is high, it isn't strictly what you will get. You might think you're an average customer potentially, doesn't mean you'll get an average rate. So
if you've got a relatively straightforward circumstance, and I'd say a lot of people would qualify for the best rates, then actually you may see on the news that a 2-year fix is nearly 7%. In reality, again, in the time of filming, you might get a rate closer to 6%, which, yes, of course, that's a lot higher than rates were a while ago. And if you're remortgaging, that's probably a lot higher than you're currently on now, but that's still a 1% difference nearly, which is going to make quite a big difference to your mortgage payment potentially across the next 2 or 5 years. So I think that's the first thing is, although we're not saying that the news is wrong, but sometimes when they give an average, it can be slightly misleading, can't it?
Yeah, exactly. So specifically for remortgages, there'll be a lot of people coming up at the moment, coming up to the end of their schemes or their products and looking for new rates. To give you a picture of what that looks like in today's market, if you're coming off, say, a 2% product, which is relatively typical of people, 2 months or 2 years or so ago, and you're up to 6%, which is the sort of averages we're looking at. That's going to increase your mortgage payment quite significantly. I think we did the maths on that, didn't we?
Yeah, it will vary slightly depending on your mortgage term and 1 or 2 other factors, but on kind of a typical mortgage term, on a capital and repayment mortgage, which I think the majority of you will be on, where you're clearing your balance and paying the interest, I think we calculated that per £100,000 of mortgage debt you have, your mortgage payment, if you're moving from a 2% rate to a 6% rate, which is a very real possibility right now, per £100,000 of mortgage, your payment will go up by around £220. So if you had a £200,000 mortgage, your mortgage payment is going to go up by about £440 and so on. So the bigger your mortgage, the more your mortgage payment is going to go down. So obviously quite self-explanatory, which I guess it's quite scary for a lot of people coming to an end of the scheme, isn't it? It's a big jump on top of other cost of living increases.
It is, it's huge. It's the biggest debt that you're likely to have, and therefore it's got the biggest impact often. We are also releasing a remortgage video. Probably it won't be long after this, within a week or so of this video being released, so that will help.
May already be out depending on when you're watching.
Yeah, possibly, so those of you that are needing to remortgage, that one will be maybe more specific and tailored for what you can and what you should maybe do if you're approaching a scheme ending.
Yeah, good point. And then I guess just to summarise, so where things are going. So at time of filming, fixed rates are still creeping up, aren't they? They are still creeping up and again, the lenders aren't necessarily following the economy. Sometimes they're reactive to each other. Some lenders don't want to be the absolute cheapest lender on the market. They don't want to be that kind of the guinea pig. So, as soon as one lender increases their rates and it leaves the next best lender as the cheaper, sometimes they then increase their rates, and it just seems like they're all just kind of creeping up. Maybe it's slowing down, but they are still creeping up, aren't they?
Yeah, the jumps, when they are increasing, the jumps aren't as aggressive now. It's maybe a 0.1, 0.2 here rather than a 0.4 or 0.5.
Yeah, exactly. And as far as the Bank of England base rate, so the base rate at time of filming is 5%. Now, it is expected that will still continue to rise, but forecasts vary, don't they? Some are saying that the base rate will finish at 5.5%. I've seen some 6.25. I've even seen some higher. Again, the forecasts do vary quite significantly. It is hard to predict, but just bear in mind that fixed rates won't necessarily directly correlate with the Bank of England base rate. So just if the base rate goes up by another 0.5%, that doesn't mean that fixed rates will directly go up by 0.5%. They may have already priced that in, and like I say, there are other factors such as swap rates and inflation and other kind of areas in the economy which will impact the fixed rates that lenders charge.
Yeah.
So really hard to predict, guys, so hard to predict. We don't know exactly what's going to happen. We're hoping that fixed rates, the rise will start to calm down, but at the moment, really, really hard to call. I think a couple of months ago, I don't think many people kind of foresaw this this kind of spike in fixed rates. I think it looked like the trend was they were slowly coming back down, and even if we thought they might go up, we weren't expecting it by this much. So really hard to call, but again, any questions, get in contact with us. And again, if you've got a remortgage coming up, just make sure you apply as soon as possible, normally within kind of 6 months of the scheme ending, to kind of lock in a rate now, just in case they do continue to rise. If they drop, you can always switch over to a lower rate before the scheme starts. Hopefully we'll hear from you soon, and thanks for watching.